Last week was our first playoff game, and my plaque psoriasis was so itchy under all my gear. Sometimes just thinking about scratching could take me out of the moment. And then my doctor told me I could get clearer skin with a pill called Otezla.
Otezla apremilast is a prescription medicine used to treat adult patients with plaque psoriasis for whom phototherapy or systemic therapy is appropriate. Otezla can help you get clearer skin after just 4 months.
Okay, ready for the next game. Talking to my doctor about a pill was a total game changer.
Don't use Otezla if you're allergic to it. Get medical help right away if you have trouble breathing or swallowing, swelling of the face, lips, tongue, throat, or arms. Severe diarrhea, nausea or vomiting, depression, suicidal thoughts, or weight loss can happen. Tell your doctor if any of these occur and if you have a history of depression or suicidal thoughts. Live in the moment. Ask your doctor about Otezla. Call 1-844-4-OTEZLA or visit Otezla.com for prescribing info about cost, and more.
Reality radio for a really great future. We're talking real money.
He's back. He's returned. The road trip has ended, and he survived the journey across the country. Yes, ladies and gentlemen, back at the microphone, Mr. Thomas Seacock.
And which is weird because you're the guy who likes to drive. What? I'm not a guy who says, I know you love that.
I love a road trip. Give me a road trip.
The reason I like it is it's bonding with my brother. And so I like that part of it, but otherwise...
Bonding over CNN and talking real money.
Well, there was that, and then we listened to 3 absolutely terrific podcasts, too. Ours was not one of them, but yeah, the podcast.
About?
Well, one was, it's called Making
Money?
Obama. I would highly recommend it. Fascinating.
Wait a minute, he's not real?
Well, they put them all together. He was there for 8 years. Have you seen him since? I mean, I don't know where he's gone.
Wait, no, I saw him on Letterman. Yeah.
When he was in South Africa, I think, recently, too. So
I think he was.
Yeah. But anyway, so that was great.
Folks, I want to welcome all of you back to the show, the big weekend gathering where we talk about money on a show called, Talking Real Money. I'm Don McDonald. Tom is back, so you got the two of us now to sort of annoy you by talking on top of each other. And our number is 855-935 Talk, 855-935-8255. So what we want you to do, what we need you to do is ask questions, because that's what we're here to do, is answer them. That's our job. So without you asking them, I don't know how we answer them. So give us a call, 855-935-TALK, and we will reward you. Tom, what'll they walk away with?
Well, they're going to get a 2-year subscription to Real Investing Journal. The next issue is mere weeks away.
Have you read it?
I did read. Well, no, would be the honest. I went through it quickly the other day. I'm bad at that kind of thing because it gets to the bottom of the list of all the things that have to get done.
I'm sure glad Barb's looking at it.
Yeah, she takes a glance at it. I hope some other people.
Because I got to get it. I got to get it mailed out next week.
I know.
All right.
So it's great information as always. It's beautiful to look at.
This
and it's
one,
educational.
The cover story is all about the changing face of sustainable investing. That's our cover piece this issue. Doing good for the economy.
I didn't read that piece, so I don't know what. I know what sustainable investing is, but I don't know that piece.
Did you hear about the fires in Sweden?
Does this relate somehow to sustainable investing?
To sustainable investing,
okay.
Yeah. It's about, good for the environment investing. Above the Arctic Circle last week, temperatures over 90.
Wow. Really?
Yeah, seriously.
That's saying something.
People in Sweden were saying this has never happened before.
I have been waiting, by the way, for sustainable investing to take off the way I expected to. It just hasn't.
I did too, and this piece really does talk a little bit about why that is the case.
Why is it?
It is an evolving. I'm not going to give it all away.
Oh, okay. Well, all right.
It's an evolving industry, and the process of picking the right investments for these portfolios, those that do fall into, it's establishing those criteria has been part of the trick.
Well, and
what makes it.
Yeah, so there is a difference between that and socially responsible investing.
Correct.
Yeah, they're two different things, so it's tricky.
Right.
Give me the difference.
You can have tobacco in a sustainable portfolio, but you can't in a socially responsible.
I'm going to go with that. I'm just going to say you're right this time and let you have it.
I think I'm right.
So, okay.
I'm going to make it up if
Call
I'm
Don and tell him how he's wrong, okay?
Okay. Always, you can call me and tell me I'm wrong. 855-935-TALK is the number, 855-935-8255. And Jim, welcome to Talking Real Money.
Hey, Jim, how can we help you?
Yes, I have a question. You guys always give good, honest comment on certain investment companies. Have you ever heard of Trivent Investment?
Yes, we know all about Trivent.
Yes,
of course we do.
Lutheran Brotherhood.
Yeah, it was the Hood earlier, and they moved over to Trivent. I think it's a branding thing. I don't know, but yes, we're well aware of Trivent.
High commissioned, kind of heavily sales oriented workforce at Trivent. Expensive products and nothing to write home about.
Oh. Yeah,
let's put it another way. It's generally an affinity sale, right? Because these are Lutherans generally selling to other Lutherans. Doesn't make them bad people, and got some Lutherans in my family too. But
it is a sales-oriented organization. Yeah. That's really what I want to get to. Is the people who Trivent hires? They hire them to work on commissions. And to us, that's not the best way to do things.
Yeah, and the thing was, years ago, you went with them because they were Lutheran, whatever, and selling you insurance. Mm-hmm. Now they're coming off as an investment company, selling you investments.
Right, and they're selling you, they are selling relatively expensive mutual funds. Their funds have 4.5% loads with annual expenses for their equity funds in the 1+% range. I've not seen any that have managed to do much in the way of beating their benchmark, so you're paying extra money, you're not getting any extra performance, they're actively managed. I would skip them if I had them.
Tom and Don are talking real money.
In addition to the Talking Real Money podcast, I also do another podcast that's very popular over at Apple Podcasts. It's called Money 30. Every day I try to educate and inform you about money in a brief 2 to 4 minute podcast. So check them out at Apple Podcasts or all the other podcast services or at money30.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And our phone number is 855-935-TALK, 855-935-8255. And not only will you get an answer to your financial question, you will get a 2 years worth of ongoing answers through your 2-year subscription to Real Investing Journal, which is absolutely free if you call and ask a question. It's our summer bribe program. We do it every summer because we have to bribe you.
The information's not good enough, I guess. So,
it is
855. Well, I'll go ahead.
Go ahead. You do
please.
it this time.
No, I insist.
I need to give you some work.
Okay, 855-935-8255. That is, by the way, toll free for those of you still on rotary numbers. 855-935-TALK. Yeah, exactly. I want to finish the thought with Jim because he raised an interesting point because almost the number one question we always get is, okay, you talk about not hiring brokers, insurance agents. Number one, how do we find somebody? And why do you dislike that style of help so much?
Because they're bad. They're
In a
just
word,
bad people. Just
They're
bad.
not
No, they're
bad
not bad people.
people.
I'm
No,
kidding.
yes.
They're not bad people. I'm sure deep down inside they're good people. They're just confused.
Well, they're
misinformed.
They're motivated by the wrong. I think they're motivated not to act in your best interest for a variety of reasons.
Really, you think that?
Well, and you can
really. After most of the investment advisory industry out there, all these people, these stockbrokers and insurance agents, tried to or succeeded in stopping the Department of Labor's fiduciary standard. Huh?
And
really? You
can-
think they don't like being a fiduciary?
You can go read more about that if you want in today's
Yeah, or
Wall
you
Street
don't have
Journal.
to if you don't want to.
Because I'll point out what Jason Zweig said, which is important. Number one, there is, and this is what you face at Trivent, there is a conflict of interest in the advice you're getting. Number one, because they only sell products from Trivent, right? So they can't really even look at the rest of the world.
They're captive agents.
Yeah, they're captive
yes.
agents. Number two,
That's kind of like, the guy at Morgan Stanley just selling you Morgan Stanley funds.
Right. Although oftentimes
They
we see
can
a
sell anything.
combination of individual equities, some of their funds, et cetera. But that's number two, the fact that they need to sell you something to create income. That creates a conflict of interest, right? I mean, you're here, I got you, or you're a client, I need you to move from this fund to that fund to make money.
Their model is not one of ongoing customer service. It absolutely is not. They do not, there is no incentive, no financial incentive or any other kind of incentive for that matter, for the bulk of the brokerage industry to provide ongoing financial services and advice to their clients. They have to make a sale to make a living.
And Jason points out correctly that a big part of the sales aspect is the firms want you to sell more, obviously, because they create more income that way, and that leads to sales contests. I can just see this, too, by the way, the types of products they get paid more to sell, and the big bonus to go to Barbados this year because I sold so many shares of X.
I didn't get the trip when I was a broker.
You never made the
I
president's club,
trip.
the chairman's club,
No,
or whatever it was?
But I did get a table saw once.
Okay. Well, that comes in valuable.
Honest. I got one of
Really?
those really cheap skill table saws, like the $100 table saw that I don't think I ever used, but I did win a table saw selling some god-awful Dean Witter.
Was that when
Income
Witter was
Trust
owned
or
by
something.
Sears?
Of course, I was
Okay,
socked
so you got
since
so
I
it was a Craftsman table saw then, probably.
No, actually, it was a different brand.
Oh, come on, really?
Yeah,
They
it
don't
was
give
really
away their own
weird.
stuff.
And it was a piece of junk, but I did win it, and I won it for selling something that was absolutely not in the client's best interest. My only excuse is, and this is an excuse I think we can provide to many of those in the industry. I was in my 20s at the time, and despite the fact that I thought I was flipping brilliant, I wasn't.
Yeah, you were brilliant at selling the product. You weren't that brilliant at doing the right
just
thing.
did what I did what I was told.
Exactly.
Done. Go sell these to people. I went, okay.
And I get a table saw? Really?
And I went a
Whoa.
table. I was going for a trip. I think it was a Hawaii trip or something, but I didn't make that level.
Second place was the table saw.
No,
I want to know what third place was.
I think it came in at 8th or 9th.
Yeah. Well, so you're not exactly what I may be wrong here, but I don't think you're a handy kind of guy anyway, are you?
No.
Were you making doors
absolutely
or
not.
something?
Honestly, I don't think I ever used it.
I see. It's still
I
sitting
think
in
it just
somebody's
sat in a garage somewhere. No, this was in Colorado.
Okay.
I think it sat in a garage until it just rotted away. And you know how long it takes stuff to rot in Colorado? It was probably centuries.
That's true. Let's give you an idea of how you can get help. It doesn't have to be us.
Oh, you're talking about financial help.
Yeah,
I thought we were
because
talking about. I thought we were talking about home maintenance help. A little.
That's the previous.
handyman
That's
help.
the previous show. You want help? I mean, because people all the time say, "Well, you say brokers are bad, and you say insurance people are bad. Well, who's good?"
Okay, who's good?
There's a lot of people good. Yeah, go ahead.
Fee only. That's the key. And I love
Not
a lot of the
fee-based.
folks. A lot of the folks in the industry going, I'm a fee based advisor.
Nope.
What? Your fee? What? Fee based? Fee only? Fee based? Wait. What's the difference? Fee based means they can sell you stuff on commission and collect a fee.
Yeah. Don't.
Fee only advisors do not sell product on commission. Period! Exclamation point. The other thing you want to make sure is that you're dealing with a registered investment advisor who is not duly registered, is not registered as an insurance agent, is not registered as a stockbroker, is always required to act as your fiduciary. In other words, always required to act in your best interest. The key word there is always.
And there's a
This
way to
dual
do
registration thing is tripping people up.
It really does, because people hold themselves out as fiduciary until they're not. It's shocking in the relationship.
That's why I invented the hats, which only one guy's bought.
I know your hat sales have been slow. So
one guy bought a set of hats.
we'll let you we'll let your shameless plug go in a minute here. But first, if you want to find somebody to help you,
break-even hats. I'm not making any money on these hats.
If you're trying to find,
they're one of the ways you can find somebody. Buy the hats and take them to your advisor and say, please wear the appropriate hat at the appropriate time.
Which you're going to need in Seattle over the next few weeks. All right, you go to talkingrealmoney.com. I think I'm
where
good
you can
so
order
far.
the hats. Right there,
Oh,
you can
goodness
order
sakes.
the hats.
No, stop it with the hats.
Okay.
I mean, come on. So when you go to talkingrealmoney.com, how do they?
It's right there on the front page.
Okay.
You can't miss it. Right?
All right.
It's right below the podcasts. There are actually two really critical lines there. There's a link to Dimensional Funds Find an Advisor page.
Okay.
And the reason we link to Dimensional Funds Find an Advisor page is because Dimensional Funds goes out of their way to find advisors who fit the criteria generally that we believe is likely to be better for you. Likely, no guarantees. You still have a responsibility to do your due diligence, and that's why the second link on right there on that same page is to download our advisor interview form.
Yeah, which is one you take in and have the advisor fill out and sign. Sign it.
Yeah. We will fill it out and sign it. We have no problem telling you the truth, none whatsoever. And any advisor who has a problem filling that thing out and signing it has something to hide, in my opinion. Why would you not be willing to tell your potential client everything you're going to do? 855-935-TALK is the number. Give us a call.
Tom and Don are talking real money.
We mention 855-935-TALK, 855-935-8255 throughout the podcast. But you need to know that you can call that number 24 hours a day, 7 days a week. Leave your question, and those will be answered in special Talking Real Money podcasts that will appear on this particular site in the future. So give us a call, 855-935-TALK, 855-935-8255.
For your real life and real future, Tom and Don are talking real money.
All right, I think I've been a good sport about this, but I want you to stop rubbing your feet on the carpet and shocking me.
You're sounding like I got the paddles up to you or something.
It's an electrocution thing every couple of minutes.
You feel better, though, afterwards.
Oh, my brain's clearer.
Yeah, there you go.
855-9, and it needed clearing. 855-935-TALK is our number, 855-935-8255. That's free, it's easy, and it's bribe time. We'll send you 2 years of Real Investing Journal, the only magazine on the planet Earth dedicated to nothing but real investing all the time. No fluff. No speculation.
And
Never.
You can't read about your favorite business there or business leader. It's really just about investing. So that's what makes it pretty unique.
This issue is about, and I've never seen an article anywhere about correlation. You ever seen an article about correlation?
Wow, you're really, I can hear the radios just going click, 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 click.
Oh,
Thanks a lot.
You need to know what this is. Inflation. We got a piece about what inflation does to your portfolio. We got a piece about, hey, you like this one. It's a piece about alternatives.
Oh, yeah, that's a great piece. Yeah. I did read that, and I love that author. Yeah.
Yeah. Did you like that author?
I do.
And a piece about the fees that are charged and how they don't do a darn thing for you, and much, 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 much more.
Okay.
855-935-TALK. What?
You put correlation out there. What is it? What are we going to talk about correlation? What's the deal?
It's what we build portfolios. We don't want a portfolio of investments that all move in the same direction at the same time.
No, I do. I want them all to go straight up all the time.
Of course, we always want the ones that go up.
Only buy the stocks that go up.
To reduce volatility, overall the perception of volatility, the feeling of volatility in a portfolio, if you have asset classes, investment types that zig when another one's zagging a little bit, they don't always move in lockstep. They're negatively correlated. They don't exactly follow each other. It reduces the feeling of wooziness you get.
Tamps down the volatility a bit.
It's volatility tamping.
Okay. All right.
We tamp it like that.
Sounds good.
Down volatility.
And there's an entire article on this?
Of course.
Okay.
We don't discriminate against any interesting, true, honest to goodness investing stuff. And it's actually a very interesting piece. I learned something about volatility in this piece.
What did you learn?
You'll like it.
What did you learn?
Just some of the specifics of it. Some of the specifics.
You can't remember. You can't remember what you learned.
If I looked it up, I could.
If you could read the magazine, you could.
If I could read the magazine.
All right, I got it. All right. So, back to where you were just a moment ago, because this is something that comes up almost every day. about finding
Where?
somebody to help me. Well, people call all the time, and they say,
Oh.
how do I find somebody
Well,
that I
wait a
can
minute. If
believe
they're
in?
calling us, then they're on the right track.
I see.
They
Okay.
probably found the right firm. If they're calling the show, okay, then we have to help. You're right.
That's it?
So what are we helping with?
Well, no, I mean,
no,
around...
I thought you were going farther.
Oh, no, that was as far as I'm going to go. Do you want to go back to the phones? Because somebody is waiting here.
Only if they can hold over the break at the bottom of the hour, because it's coming up in about a minute.
Okay.
What do you think?
I think we should start the call. That's just
All right,
me.
go ahead.
Barry,
You go ahead.
welcome
You're-
to Talking
you're the
Real Money.
co-host.
How are you? How's it going, Barry?
It's going just fine. And
Good.
you?
Very well, sir. How can we help you?
Better than I thought, I guess.
Go ahead, Barry.
You're talking about investment houses, and so I'm interested in what you think about Merrill Lynch.
Mother Merrill Lynch. Wow, this is going to be a longer segment than I thought.
Yeah, it really will, because
can you
Merrill
hang on,
is an
Barry? Yeah.
Well, I'm going to start.
Yep.
Merrill is an interesting firm, Barry. They're an old school brokerage firm that when the Department of Labor passed that fiduciary rule that's since been tamped down, they went to a more fiduciary type model. But there are some issues, Barry, and some I think issues that are pretty serious that need to be considered. And on that note, what we're going to do is make you hang on to the other side. 855-935-TALK is our number. 855-935-8255. Give us a call.
Tom and Don are talking real money.
If you're sick of investing through an insurance agent or a stockbroker and you're in the market for a fee-only advisor who charges truly low fees and uses a scientific approach to building portfolios for your risk tolerance and need, you should check out Vestory. Tom and I started this firm, and it is devoted to educating everyone, total transparency, clarity, low fees, and great service. If you're looking for an advisor, you ought to at least take a look at us at Vestory.com. That's Vestory.com. Or give us a call, 800-386-3004.
Reality radio for a really great future. We're talking real money.
And once again, that number is 855-935-TALK, 855-935-8255. If you call and ask a question, you get bribed with 2 years of Real Investing Journal sent to your home absolutely free via the worst mail service in the world. It's called Standard Mail.
I thought you were delivering it.
We don't guarantee anything's actually going to get there.
You know, basically, and you know how that works, that actually goes in the postman's bag. This is the truth.
Yeah.
Whenever they feel like they have time to deliver that mail, they deliver it.
Do they still have bags?
Well, okay, pardon me. I don't know what but I mean, it goes into something.
It goes in the truck,
There is
maybe.
no requirement as to when they have to deliver that piece.
No, I've discovered that.
Yes, that's the truth. So,
But for $25 for 2 years, we can't afford first-class mail.
No, first class would be very expensive. So
Yeah, it would.
a lot of publications do this.
855-935-TALK's our number. We are talking about Merrill Lynch.
And we're talking with Barry about Merrill Lynch. Hi,
One of
Barry.
my favorite topics, these big brokerage firms.
You still there,
now,
Barry?
Merrill Lynch is moving more toward a fee-based model. And one of their big fee-based models, it's a wrap fee where they build these portfolios that are very similar for people, but they kind of manage it more. You get a little more personalized attention. The Merrill Lynch Personal Investment Advisory Program. Just so you know, I'm not just making this stuff up. I am actually looking right now at Merrill Lynch's Personal Investment Advisory Program, ADV Part 2 brochure. And just as an aside, these are supposed to be written in layman's language and be
They
easy to
changed
read.
it. Yeah, that's supposed to be. They came up with a term a few years ago. I forget what the term was.
Yeah, Merrill's isn't. It isn't until page 16 that you get to their fees. In our ADV, you get to the fees on page 3, I think. Like right away. Theirs are on 16. Here you go. This is what I love about companies like Merrill. If you have $500,000 invested with Merrill Lynch, and I love seeing Tom's face when I say this number. If you have under $500,000 in an equity or a balanced account, your annual fee is 3% per year.
Just to put that in perspective, Barry, instead of me taking the gang to Lake Chelan here in a few weeks, we'd all be going to Hawaii.
You would not be going to. You would be going to Tahiti.
Okay, pardon me.
Would be
somewhere a little more remote.
You would
all right?
you would be going to your own private South Pacific island.
Good point. Over time, 3% a year kind of adds up. For perspective,
let me
just give our highest fee. Our highest fee is 0.9% on a similar situation. So that is
the next half
extensive.
a million is 2.5%. The next half a million, 2.5%. So for $1 million, their fee is 2.75% per year. Do you know how hard it is to make enough money to overcome that kind of a drag on a portfolio? Plus, they tend to use actively managed mutual funds that in and of themselves have higher fees. It annoys the living daylights out of me, Merrill.
Just to finish the thought here, Barry, here's the reason I struggle. Number one, there's a thing called a broker's portfolio. People bring them into the office all the time. They usually look like this. There's 4, 5, or 6 individual stocks. Then there's some proprietary products that Merrill sells or the brokerage sells because I'm sure the commission's higher. And then they always sprinkle in a couple.
But wait, there are no commissions in this 3% account.
But they have higher operating expenses or reason they're in the portfolio. Then they always sprinkle in a couple, I've noticed, ETFs or index style funds so they can say, oh, yeah, you're using indexing. It's a broker's portfolio. Merrill, by the way, the last study I read, this goes back a few years, they had the biggest research department in the business to research companies and the worst track record of picking stocks, making recommendations on which ones would outperform the market. So that's it's portfolio development. Yes, fees are important, but it's also been the track record that just has not been there to get anywhere close to that 3% a year fee.
And anything up to $4 million is at 2%. But, Tom, they give you a little break. If more than 80% of your portfolio is mutual funds or ETFs, they're going to cap your fee at 2%.
Is that enough for you, Barry? Is that fair?
Yeah, more than I asked for, actually. It's kind of difficult on the reporting side to really pick out what the fees are.
Oh, it's almost impossible because they don't make it clear.
Right, yeah,
it's opacity is the hallmark of companies like Merrill. And what you're going to have to do is, if you're working with them, you're going to have to go back to your person and ask them to please put in writing exactly how much you're paying in fees, how much you paid in fees and commissions on an annual basis, and tell them you want to go back 5 years. You want to know the number. Go all the way back. 855-935-TALK is our number. That's 855-935-8255. If you have a question about your money and how it's managed, how you can manage it better, how you can better understand how this process works, please give us a call. We're from noon until 2 on the West Coast, 3 to 5 on the East Coast. 855-935-TALK.
Are talking real money.
Keeping the podcast breaks as painless as possible is my goal. That's why I want to very quickly tell you about the only magazine I've ever heard of that is 100% real investing all the time. There's no business news, no speculative advice, and certainly no lifestyle stuff. It's called Real Investing Journal. I publish it every quarter, and you can get 2 full years for only $25 at realinvestingjournal.com. That's realinvestingjournal.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Money, making real boom boom money.
I like
talking real money.
Tonight. Yeah, I like it.
I thought those commercials went away, and now they're back.
I know, but everything that leaves returns, right? Or whatever they say.
Monster truck money.
We'll run over low returns.
Yeah. Call now. 855-935-TALK. 855-935-8255. And get a free magazine subscription, too. All righty. Let's see. Bruce, I think it's your turn. Welcome to Talking Real Money.
Hey, Bruce.
Hey, thank you so much. I enjoy listening to you guys. I got a story about Merrill Lynch many years ago when the NASDAQ went through that era when it kind of went with the bubble and started to crash. I had a broker from Merrill Lynch who I was complaining. I said, listen, you're giving me all this advice and charging me 3%, 4%, or whatever you're charging me. and I'm down like 35% on my portfolio. This guy says, "What are you complaining about? I handle my wife's money, and I swear to you," he says, "I'm down 75%. This is what he told me. And I thought to myself, I am listening to this guy's advice. Forget it. I swear.
Instilling confidence.
First of all, I can't believe he was that stupid to share that with me. But yeah, okay, I'm going to stick with you, buddy.
Oh, that's which wife was it, by the way, is what I want to know.
No kidding. Anyway, I just wanted to share that story with you. I enjoy listening to you guys.
That's very kind.
Thank you so
share.
much, Bruce.
Great story. Wait a minute, you think you got it bad? What about my wife?
I gave you the good portfolio.
Exactly.
I gave the bad one to my wife.
I think the better answer is, you wanted to be in the program that made money. Okay, well, you didn't say that. I mean, come on. So,
but therein lies part of the problem, is that expectation on the part of clients, and it is not. There's some blame with the clients, but these firms have made it appear that they have magical talents, that they have predictive, prognosticative, almost psychic skills to get them back into the market or to get them out when it's going to go down, get them in when it's going to go up. And nobody has that. Nobody knows. If you're looking for it, you're not going to get it.
And brokerages were guilty of moving a lot of money from the S&P 500 into tech only in the early 2000s because what had happened in the late 90s, right? Everything had gone straight up with technology. So they moved a lot of people over. And then, as Bruce mentioned, the bubble burst and it went straight down 50%. So
we don't believe that you're ever going to be in the right place at the right time except through something that we can't control, and they call it luck. They call her Lady Luck. Alan, you're up next. Welcome to Talking Real Money.
Hello. I got a question. When I talking about brokers, there's a Bellevue company called Online Trading, which supposedly has some magic formula that you hear all the time. They're always on radio ads. What do you think about them?
What is this, the setup show? I mean, come on, really?
I love this stuff. Okay, here's the deal with those kinds of products, all right? There are a lot of them. These things are all over the country. These are organizations that are totally unregulated because they're teaching something. Now, before I get into the details of how these things work, let me ask you a really important question, Alan. If you had a system that could offer triple-digit returns, and yet if everybody did it, it wouldn't work, would you teach anyone else how to do it?
Of course not.
Whoa.
And that's the problem. But here's what they do. These guys get you in with their free class. They got the free class, then they've got one going 14 times a day, 7 days a week. And then they get you to come to the weekend class, which is a few $100s. And then at the weekend class, they tell you, well, you're never going to be really good at this unless you take the Platinum Master Course. And some of those, and I don't know about this particular one, but some of those run in the 4 to 5 figures for training that is of, in my opinion, negligible to absolutely zero value. Day traders fail miserably, and there are multiple studies that have shown this. There was a huge study done in Korea that showed that just under 10% of day traders made money, period. Made money.
Just so I know, North Korea or South Korea? Because I didn't know there's that much trading in North Korea.
That was North Korea, because there were only like 3 of them.
There's not
all of them fighting over the one internet connection in Pyongyang.
No, actually, the electricity, if you don't mind, first. No,
the other 2 guys are pedaling bicycles with little generators on them.
Alan,
to keep the other guy online.
Trading systems, by the way, online trading, not the only one. There's a lot of people out there with trading systems. There's a lot of people out there with newsletters. And Don knows this person. I had lunch with a guy that I've known that used to work for me that does advertising for these guys because he's on the radio locally, and he believes it. He's a smart guy. He thinks that this guy has found some sort of financial nirvana here that's going to allow them to beat the market. It's a matter of trust. I don't trust them. I trust the academics. I mean, at the end of the day, so that, and they have track records.
And again, here's the problem with the way we think as human beings. We tend to let logic go. And the best argument against this is if you had a system that was that good, why wouldn't you, instead of selling it to someone, be out there just trading like crazy?
Or
you could go to the bank and borrow money at 10% and be turning 200%.
Or you could have a mutual fund or a hedge fund. There's no track record of anybody having those kind of returns for a long period of time. You could go do that and make a lot of money.
Wait a minute. No, but that's the reality. You see, these organizations, the newsletters and the schools,
say anything
are
they like.
Totally unregulated.
Yeah, protected
so
by
they
the
can
First
do
Amendment.
or say anything they want, and there is little or no downside.
Yeah, fair enough. Again, if you use logic, you know that, first of all, if you make the returns that they suggest, you have more money than Jeff Bezos in about 5 years. Right?
Oh my gosh! Yes. The power of compounding.
Oh yeah, you'd be massively rich, and I don't know any of them that have more than Jeff Bezos. Number one. Number two, there's never a published track record that shows my tax returns, real stuff in real time, how much was made. Never comes up.
Isn't it funny? It's all anecdotal.
Yeah. So and again, show me that. Show me what the tax. We had the guy on, if you remember, called in a few weeks ago, said that we're just old school and index funds are, nobody pays attention to that. The real money is made trading stocks, buying and selling the right things at the right time. Can't find it.
I just ran the number. If you, I've heard some of these guys claim up to 250% returns. So let's use 250% as your return. If you invested $10,000 and in 10 years, wait, I misdid this. In 10 years, you would have right. 72,846,844,208,527.44.
And if you did, then Jeff Bezos would be your Uber driver. It wouldn't be the other way around. So
72 trillion is greater than the gross domestic product of the United States.
Wow, then you're telling us what to
buy the country.
Exactly.
I think I'll buy the United States today.
How much is it?
Because I'm such a successful trader.
Wow. There you go.
Can't work.
The number.
Math doesn't work. Yeah. It just doesn't work. It's like multi-level marketing. Do the math someday. It's like the math doesn't work. Eventually, everybody on the planet would have to be in your downstream for you to make the kind of money they claim that you can make. 855-935-TALK's our number.
Tom and Don are talking real money.
If you need help allocating your retirement plan at work, you can get free help at 401-411.com. That's 401-411.com.
For your real life and real future, Tom and Don are talking real money.
And if you want to learn about the real way you make money, the slow, dull, scientifically based, no magic formula way, well, we've got a couple of big retirement events coming up. The Retirement Freedom in Bellevue, and then Retire Meet in Tacoma coming up in August and September. And you can order tickets for Retirement Freedom at TalkingRealMoney.com, and Retire Meet, always go to RetireMeet.com, RetireMeet.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?